Good morning, everyone, and welcome to the second webinar in our short series focusing on menu. My name is Natalie Dewar, and I'm part of the protection team here at Royal London. Once again, I'm joined by my colleagues Shelley Reid and Gregor Sked, who are the intermediary technical and development managers here at Royal London. Today, they're going to take us through some top tips and show you some examples on how to make income protection an essential part of a menu plan. Before we get started, I've just got a couple of housekeeping things to cover as usual. If you have any questions, please feel free to submit these in the questions section or send us an email and we will get back to you. If you have any sound or visual issues during the webinar, please contact the GoToWebinar support team. They'll be able to help you with all your technical problems, and you'll be able to find a link to this in your viewer. After the webinar, we'll send out a link for you to answer a few questions, and once you've submitted your answers, you will receive a link to your CPD certificate. And I think that's enough for me for just now. So Gregor, I'll pass over to you to get us started.
Good morning, everybody. Thank you so much for joining us today, and thank you to Natalie for that really warm introduction. As you say, this is the second and final part of our two-part menu webinar series, and it is great to see a lot of really familiar names on the attendee list there. So today, as we bring this series to a close, we're going to be helping you to make income protection an essential part of your menu conversation. And to take you through today's session, you'll have two of Royal London's protection development and technical managers. You'll have myself, Gregor Sked, and my colleague, Shelley Reid. And over the next hour, we'll be taking you through some tried and tested methods of bringing income protection to life with clients, but also taking a look at how using the Royal London menu plan can support and hopefully grow your protection business. Now, if we jump ahead 60 minutes from now, we should hopefully be comfortable in saying that we've achieved our learning objectives for today, which are as follows: to have a better understanding of what happens when someone is off work sick and what level of state sick pay they may get, to understand how to deal with objections to buying income protection, being able to create a bespoke report to show the risks clients face and the probability of making a claim, to have a clear understanding of which clients particularly need to discuss income protection, understand how to use the Royal London menu tool to start a conversation about income protection, be able to describe the additional features included in Royal London's income protection policies, and finally, being able to build a cost-effective menu-based solution to include income protection to suit your clients' needs and budgets. So quite a lot of learning objectives there, but we are going to cover them off in some nice bite-sized chunks. So hopefully we're going to go through all these points and share some, as I said, exciting hints and tips. But we're going to start off by looking at a call that I hope nobody on the call would want to be on the receiving end of. We're then going to look at some common reasons why people don't think they need income protection, followed by some tips to position income protection, how to give your clients income protection benefit a boost, the claims journey clients might expect to see. Then we'll look at how to build income protection into a menu plan, as well as how to find opportunities to talk income protection with clients, and finally some more reasons to talk about Royal London. So to kick us off today, Shelley, shall we take a little look at our case study client who we're going to use throughout today's session, and just a bit of a reminder as to what their situation looks like at the moment?
Absolutely, and a warm welcome from myself to today's webinar. So we've called this segment When Reality Bites, and in a little while I'd like you to listen to what we've labelled a dreaded call. But first, let's meet Kate, who is the client in our telephone conversation. So Kate's 29, she works as a lab technician and she earns the average full-time UK income of just over 30,000. If we rounded that to 30,000, this equates to a net take-home pay of just over £2,000 per month or £462 per week. Now, Kate currently rents a one-bed apartment and is saving to purchase her first home in the next few years. So just to set things up, please have a listen to this audio clip and see whether this kind of call could actually happen to you or an advisor in your company. So this is a phone call between Kate and her advisor. Have a listen, see what you think.
Hello, ABC Financial Services.
Oh, hi, can I speak to Simon, please?
Okay, I'll just pop you through.
Hi, Simon speaking.
Hi Simon, it's Kate Smith here. I don't know if you remember me. You arranged some insurance about a year ago when I first rented my flat from Edinburgh Lettings.
Hi, Kate. Yes, I do remember speaking with you last year. How are you?
Well, not really very good, Simon. I've really injured my back and it looks like I'm going to need some spinal surgery. So I'm in such a lot of pain and I think I'm going to be off work for at least 6 months. I do remember though, you set some insurance up for me. So could you help me make a claim, please? I've been looking for the paperwork, but I just can't seem to find it. But the premiums have been taken every month by direct debit. And the thing is, I've just paid this month's rent, but the next one will be due in just over 3 weeks. And I'm really going to struggle to find it.
Oh, no, that's terrible. From my notes, I can see that you had sick pay for 6 months from work. Is that still the case?
Well, that's another thing. I changed job at the beginning of the year, so I'm not entitled to any sick pay benefits just yet because I haven't been with my new employer for long enough.
Okay, just a sec. I'm just having a look through your file. Okay, here we go. So I can see that we did arrange a protection policy for you.
Oh, I thought so. So that's good. Can I make a claim as soon as possible? I've been so worried about paying my rent and bills.
Well, Kate, what we set up for you is a critical illness policy, but I'm afraid it's not actually going to pay out for the sort of sickness that you're talking about here. The critical illness policy is designed to pay out for a critical illness such as cancer, a heart attack, or maybe a stroke.
Oh, it's just that a couple of years ago, my brother suffered a disc problem really similar to me, and he received an income every month which took care of his rent and bills.
So it sounds like what your brother had was a protection policy called income protection, which is designed to replace a lost income if you're unable to work due to sickness, just like your brother. If you remember, I did mention it during our first meeting, but you said that it would push you over your budget to include income protection and that you felt you had sufficient cover from your employer at that time.
I don't really remember that, Simon, but I think if I'd really understood what it would have meant for me, I'm sure I could have found a few extra pounds in my budget.
I'm really sorry, Kate, but looking at the type of protection you've got at the moment, there's nothing much more I can really do.
Well, I'm sorry too, Simon. I'm in a bit of trouble now and I really don't need this extra stress. I don't know what I'm going to do and I'm sorry, but I'm going to have to cancel that other direct debit. I'll be in touch, Simon. Bye. Well, I think you'll agree, not a pleasant call at all to receive. And what I'd like you to consider before we move on is really how would you feel? I think probably pretty awful for the client, maybe asking yourself if you could have done more. Did you make the risk and ramifications clear enough to Kate? And could this happen to you? Are there clients who could be in this exact same situation as Kate? And what could the outcome be? Well, Kate was certainly going to seek advice, and we're all aware of the very litigious state we live in. So, what steps could we take now? Well, at Royal London, we want to help you have compelling menu conversations to include income protection. So, let's first of all just have a look at what we call the vicious circle. Now, when someone goes off work sick, they may have to take some time off. They may lose their income, but those bills and fixed costs will still remain. They need time to recover, and they could be under severe financial stress with trying to meet those mortgage, rent, household bill payments. This could result in them returning to work too early, and that could again result in the recurrence of that incapacity, which in time could lead to them being off work sick again. So you can see why we call this a vicious circle. So why aren't clients buying income protection? And probably more importantly, why aren't advisors making income protection an essential part of their advice? I'm going to hand back to Gregor now to help us overcome some of the common objections surrounding income protection.
Yeah, thanks, Shelley. So just to address a couple of the points that you've mentioned there, and particularly bringing to life the vicious circle and dreaded call, around why is income protection maybe not something often sought after by clients? Do they not understand the value of it, etc.? So we're trying to address those over the coming slides. But before we do so, I want you to have a little think about some of the objections that you've had when you've been discussing income protection with clients. And if you want to share them in the chat box, then feel free to do so. So what we're actually going to look at over the coming slides are some of the most common objections that we've heard from advisors, and take a little look at some simple tips that might help you to overcome them if you face them in the future. So first up is one of the most common ones that we've seen, and that's I'm going to be able to live off state benefits if I have to take time off work. Now, chances are we know that it's unrealistic, that the lifestyles we're accustomed to we'd be able to continue if we had to rely on state benefits alone. But what are the chances that clients understand this? And actually maybe just knowing some of the high level benefit figures to put across to clients, that might be able to be enough to show them that actually it's quite unlikely that they'll be able to live solely on state benefits if they do have to take time off work. But just as a bit of a reminder, what are some of the available benefits from the government? So the first one we're going to look at is statutory sick pay, or SSP, and this is available for employed individuals at a rate of £95.85 per week, and it's payable for a maximum of 28 weeks. Now, employees must be off work sick for at least 4 consecutive days to qualify. And if we bring back Kate from earlier, so remember she's on an annual salary for about £30,000, and assuming she went off work sick and then straight onto statutory sick pay, we can see the income drop that she is likely to receive. And we're using her weekly take-home pay figures in this example. And actually for Kate, that's an income drop of 79%. Now, ESA, or Employment and Support Allowance, is the second form of state benefit available to people who are off work sick. Now, ESA, this is available to people who are actually self-employed and employed. Statutory sick pay is only available for people who are employed, not self-employed. Now, ESA is available once individuals' statutory sick pay ends, so that's after 28 weeks, or really the best part of 6 months. And as I said, self-employed individuals are able to apply for ESA without having to wait for that full 28 weeks. Now, there are 2 categories of ESA. Firstly, we've got the work-related activity group. Now, this is for people who at some point are likely to return back to work, but for the meantime, they're still deemed as being too incapacitated to do so. And they receive a weekly benefit of £74.35. And again, somebody on the likes of Kate's annual income, that's going to be an income drop of 84%. And actually, one other thing to note here is that this category of ESA or ESA is the same amount as job seekers allowance. So for some people who may be severely incapacitated, they could see themselves being on the same amount of benefit as those who are actively seeking employment. The second category of employment and support allowance is the support group. Now, this is for individuals that are really unlikely to be returning back to work due to the severity of their incapacity. And here the income drop is ever so slightly less, but ultimately still not a lot of money. Now, the weekly benefit for this category is £113.55, so an income drop of 75%, again, based on an annual income of £30,000. Now, I am keeping this slide fairly high level. Employment and support allowance can be quite a lengthy process. It can be quite a complex process. And in fact, the application form for employment and support allowance is 68 pages, of which 57 need to be completed by the client. What about the objection that I have employer benefits? So maybe they do have employer benefits, and actually they may be really generous from their employer. But actually probing a little bit further might be able to help understand how realistic is it an option for clients to use employer benefits? And in actual fact, do the clients know what they're entitled to from their employer if they have to take time off work sick? When arranging income protection for clients, knowing that, as well as how long that payment might last for, is really, really important. And what happens if something happened while the client was employed? Perhaps they're made redundant, maybe their role's terminated. Relying on sick pay from their employer could be quite a risky option. And what if they move to a new job? That new job might not have any sick pay at all. It might offer a lower sick pay arrangement than what they were currently on. And finally, how long will their employer sick pay out before it drops onto statutory sick pay? 6 months full pay, 6 months half pay is quite a common approach, but remember, what the client is entitled to and for how long ultimately varies from employer to employer. Now, what about if the client believes they've got enough savings, and actually how much is enough? If the client did have endless resources of capital, then yeah, they probably could rely on their savings. But realistically, we're not a nation of savers, and where people are saving, it tends to be for another purpose. It could be for buying their first home, it could be for buying a car, etc. So again, looking at Kate's situation, let's assume she'd built up a small but still good sized saving pot of £5,000. She's got monthly outgoings of £1,500. Using her savings pot to keep her going through her time of absence through work, we can see that actually that savings pot is going to have depleted by the end of month 3. So when it comes to month 4, the question is there about what happens next? What does she do next? Now, if you joined us for the first part of our webinar series, you might recognise this. And another common objection to why clients don't think they need income protection, and actually protection in general, is that they think that they're superhuman. They don't think they're going to need it. In their eyes, they're young, they're fit, they're healthy. So why do they need to plan ahead for an eventuality that might actually never happen? And actually, this is where showing them the risks that they face could provide them with that light bulb moment, that moment where they want to talk more about protection. They understand what it means to them. Now, the example I'm using here is, again, using Kate's details, and all I need to build this risk pyramid is Kate's name, her gender, her smoker status, her age, and her retirement age. And we can see from this pyramid what the probability is of Kate developing a critical illness, developing a condition which means she has to take 2 months of work sick or more, or actually the chance of Kate dying. And this is all the probability of this happening to Kate before she reaches her retirement date. And at the bottom we can see the probability of Kate encountering any of these eventualities before retirement. Now, you've probably heard us talk about the Marketing Studio before, but if you haven't, then to build your own risk pyramid just like that one on screen just now, then just head on to studio.royallondon.com. And as I said, it can be a really powerful way to bring protection to life both during and after your meeting with clients. And each document that you can produce on the Marketing Studio can actually be white labeled, so your own company logo and contact details can appear on them. And actually on the Marketing Studio, there's a whole range of posters and sales aids and reports, and 2 of the other reports that you can access are the critical illness cover report and the income protection report. A little bit more suited for today's topic, and actually they're a little bit more detailed than the risk pyramid report that's in the middle of your screen. So while the risk pyramid might have taken me 10 to 15 seconds to produce, the other 2 reports here will probably have taken me maybe 15 to 20 seconds to produce. So still very quick and easy to produce. And the aim of the report is just to provide your client with even more reasons to why they should consider protection and ultimately back up the points that you're discussing during your meeting. And to finish up, one other thing we tend to hear in the industry is that a policy will never pay out. And of course, all life companies do release their annual claims reports every year, and our 2019 claim stats can be found on our advisor website. And here we've taken our top 5 reasons for claim at Royal London on income protection policies. And you can see at the bottom right hand corner there, just thought it was quite an interesting stat to show. So the average time a plan is in force before a claim at Royal London takes place on income protection is just 5 years and 1 month. So Shelley, there's a few ideas amongst there on how to overcome some of those common objections clients might give when we're talking about protection and income protection. But assuming the client then has that light bulb moment to why they want to talk more about protection, are there ways or particular suggestions for advisors listening to them how they can position income protection with those clients?
Yes, absolutely. We've got a few hints and tips from advisors just like you, ladies and gentlemen, on the call today. So let's have a quick look at those. Here they are on the screen now, and we'll briefly look at each one of them in turn. So the first one, explain why we're talking about protection and its importance. So advisors have told us that they've used very successfully these sorts of wordings. So let me explain how I work with my clients. Maybe saying there are significant risks that you and your family could face financially. And the purpose of this protection meeting today is to make sure that should the worst happen, you and your family are able to keep your home and help maintain your lifestyle. And I think that's really the teal box there. That's It's really quite a powerful statement, isn't it? To make sure that should the worst happen, you and your family are able to keep your home and help maintain your lifestyle. Secondly, discover what's important to the client and their family. So before I can give you any advice, Mr. and Mrs. Client, I need to get to know you a little better. So tell me, what do you like to do as a family? What do you enjoy doing? What about the children? And you can see here in these boxes some of the answers that you might expect to receive. So it could be that clients are enjoying telling you about their 2 or 3 foreign holidays a year. That might be important to them. They might also tell you about their gym membership and how they love keeping fit. They might tell you about their caravan and camping holidays. They might start to tell you about their children's clubs and activity and the sort of things that they get involved in. So, why is this an important conversation? Well as getting to know your client and having a chat with them and putting them at ease, these are very important because all of these things here that your clients love doing, none of them are free of charge. All of them have a cost attached to them, whether it's a monthly cost or a time by time cost, but none of them are free. And I think it's important when you're talking to clients to talk about these things they enjoy doing and just get them to think about the fact that they need that monthly income to be able to maintain all these things that they and their family do. So if they go off sick and their income is reduced or disappears altogether, it's going to have an impact on their lifestyle and the things that their family love to do. So next, ask them what would happen if their income stopped yesterday. So what would you want to happen to your lifestyle, your standard of living, and above all, the ability to keep your home? And why is this an important conversation? Because it gets your clients to focus on what would happen if they had to be off work sick and they had very little or minimum statutory sick pay or state benefits. So that's why it's an important conversation. It focuses the client's mind. Penultimate one, talk about the risks that they face. So it's the client, you've painted a vivid picture of your lifestyle and family life. Tell me the risks that could impact your lifestyle in a negative way. What's the worst thing that could happen to impact your lifestyle? Well, they might talk about one of them dying prematurely, but I'm sure in that conversation they're going to talk about losing their income because they become sick or injured or incapacitated. And obviously that's your cue then to talk to them about the solution that you can set up for them to make sure that if the worst does happen, if they have to take time off work, then there is a plan that can replace that income. I would also point you to this regulatory warning that we see all of us pretty much every day. You'll remember that this statement appears on all mortgage key facts illustrations and also on the client's mortgage offer. And it simply reads, your home is at risk if you do not keep up repayments on your mortgage or other loans secured on it. So this is really, I think, a bit of a gift. It's an excellent prompt to have a conversation about what those risks are and find out whether there's something you and as an advisor can do to help them overcome those. And finally, make it part of every conversation you have. We're going to talk in a moment about some opportunities that you currently have in your client bank, but I would just suggest that everyone that you talk to needs to just be reminded or to think about what might happen if they do have to take some time off work poorly. So I'm going to hand back to Gregor again. Gregor, could you tell us about the importance of indexation on income-based plans and the very generous way Royal London treats indexation on income protection policies, please?
Absolutely. So the next couple of sections are actually looking at a really fantastic little gem within our proposition. And firstly, as you say, Shelley, this is a little bit about how we treat indexation on income-based policies. So it's all about giving your clients benefit a boost. So actually, when you apply for income protection with Royal London, you can choose to have the cover set up on a level basis or an index basis. And if you choose indexed, you can choose the rate to increase your cover each year by either 2%, 3%, 4%, 5%, or RPI. And of course, as it says on screen, premiums for index cover are going to be slightly higher than for level cover. And over the coming slides, we're going to take a look back at Kate, and we're going to see how much of a difference it's going to be for her, assuming her income protection policy, should she take one out, is indexed if she had to make a claim compared to not being indexed. Now, let's first look at a policy which hasn't been set up with indexation. So this is assuming Kate has a level policy. The monthly premium is £50.99. The sum assured is £18,000. And in this scenario, 5 years into the term, Kate has to make a claim. So she has to go off work sick. And having waited for her deferred period to come to an end, the benefits paid out each month to Kate. And actually, what else we know about Kate here is that she's off work sick for 7 years. And because the policy doesn't index, the sum assured is the same as it was at the start. So it's 7 years later, it's still £18,000. And over those 7 years, there's actually been £126,000 paid out through Kate's income protection plan. And we're going to take a little look shortly at connected claims. But before we do so, I think we're going to take another look at the scenario, this time where Kate's income protection policy is indexed at a rate of 5% per annum. And how we treat index policies at Royal London is that every year we'll write out to your client ahead of the plan anniversary to confirm what their new sum assured will be based on the increase that they've chosen. And as we said, for Kate, it's 5%. And just to be aware, if the client decided for whatever reason that they didn't want to have their sum assured increase, they could choose to miss a year and take a year and miss a year and take a year and so forth. But if they choose to decline indexation on their sum assured 2 years in a row, then we'll stop writing out to them to offer an indexed amount each year. So in such a case, you could assume that it's no longer part of the policy. So let's look at the scenario again, this time where Kate has indexed and had accepted the indexation amount every year. So premium in this case is slightly higher, and the starting sum assured is still £18,000. However, as it's indexed every year, you can start to see the graph slowly increasing. And again, 5 years after the policy starts, Kate has to go off work sick. She's off work sick still for 7 years in this scenario. And because every year the sum assured's increased by 5%, at the end of the 7-year claim, the total sum assured for that particular year is £30,786.12, meaning the total benefit paid out over those 7 years is now £187,000 and 46 and 94 pence. So much greater than the non-indexed amount. Now, let's look at the same scenario again, but this time where Kate has income protection from Royal London, again indexed at 5% per annum, but chooses this time not to increase her plan sum assured when we write out to her. And this, as Shelley said, is where one of the fantastic little gems with our proposition comes to life. So exact same scenario again, same monthly premium as before, and the same starting sum assured. But in the first 2 years, Kate refuses to have her sum assured index, therefore we essentially remove it from the policy. And I say this is where the little gem at Royal London comes to life, because at claim, which again, same scenario, 5 years later, 5 years after the policy starts, you might assume that the benefit paid out would be level because we've removed indexation from the policy. However, at Royal London, in this scenario, we would index the sum assured. We would index this at the point of claim going forward. So again, assuming Kate made a claim for 7 years, the annual sum assured at the end of 7 years is £24,000, just over £24,000, and the total sum benefit paid out over those 7 years is just over £146,000. So while not as great as a fully indexed amount, it's definitely a lot better than the non-indexed amount. So a fantastic little quirk in our proposition there. Now, I know some of you will be wondering about connected claims, and again, we've got a fantastic little gem in our proposition at Royal London for connected claims. So let's again bring Kate back. We've assumed Kate has gone off work sick, and what would the claims journey for Kate look like with her income protection policy? So we've got Kate here. We know a little bit about her. She's got a 13-week deferred period on her policy. She has a £1,500 a month benefit payout, and payment period is 5 years, which means Kate could be off work sick for 5 years and receive her income protection benefit during that time. And the term of the policy, 35 years. Now, unfortunately, Kate does suffer from a condition, a musculoskeletal condition. She does have to take time off work sick, and before any benefit is paid out, she must wait for the deferred period of 13 weeks to come to an end. Now, remember, Kate's policy has a 5-year payment period, meaning she's got potential to make up to 5 years worth of claims. So we've got our little 5 years in the bucket at the bottom there. And in actual fact, Kate's off work sick for 2 years and 3 months. So assuming we ignore the 3 months deferred period, Kate receives a total of 2 years worth of income protection benefit, after which Kate returns to work and things seem to be okay. However, after 2 months back at work, Kate suffers a relapse of the condition that she was off work sick previously for and has to go off work sick again. So she can actually at this point in time claim for a further 3 years if needed, bringing her up to a total of 5 years in her payment period. Now, she won't have to wait for her deferred period in this instance because she's been back at work for less than 6 months since her last period of sickness. Instead, the claim will be paid straight away. Now, what I'm wondering is, what happens if Kate returned to work, but she was at work for longer than 6 months before she had a relapse? So let's assume in this scenario, Kate's actually off work sick in the first instance for 5 years. Actually, it doesn't necessarily matter how long she's off work sick for this little quirk to play. So Kate's received income protection benefit that whole time. And again, you might be thinking that she's used up that full 5 years worth of benefit, so she's got no more income protection availability to be claimed. However, as long as Kate returns to work for a period of 6 months or more following her previous claim, Kate will be able to make a claim for another 5 years or more. So as long as she's returned to work for 6 months or longer before relapsing, or again, could be a new condition or the same condition as before, her payment period will essentially reset. So as I said, she can make a claim for another 5 years. And again, as I said before, it could be for the same condition, it could be for a new condition. The only thing to be aware of here is that Kate will have to wait for her deferred period, but it's worth mentioning here that that 5-year payment period will reset. And it could be a fantastic way for you to bring income protection to life with clients and actually make your advice stand out with this little quirk. So Shelley, we've talked a lot about income protection there, obviously, and it might be obvious for advisors to say, well, who should I speak to about income protection? Well, actually, everybody that's employed. And actually, yeah, that may be true, but that approach might end up being a little bit overwhelming. So have you got any areas or ideas that you might want to share today that could help our listeners talk income protection a little bit more targeted?
Yeah, yes, of course. Let's have a brief look then now at clients I'm confident you already have sitting in your client bank who could really benefit from learning about how income protection could safeguard their home, their family, and their lifestyle. So, here are our list of potential clients. Let's look at them one by one. So those clients who are renting, first of all. Now, I know they don't have a large lump sum mortgage to protect, but they still have a monthly rental commitment and household bills. And income protection is perfect in providing a replacement income should a tenant need to take time off work due to sickness. I'd urge you to also think about the children of clients. I'm sure existing clients would have absolute no hesitation in referring their grown-up children to you when they're looking to buy their first home. But are they aware that you need to speak to them about their protection needs as a tenant too? And how about those clients with extreme hobbies, or maybe not just extreme, those clients who maybe ride a horse, love to go skiing, they could be involved in motorsport or diving, or really just play a bit of Saturday afternoon football or Sunday morning rugby. All of these clients have a higher risk of an injury that could mean them needing to take time off work. And all income protection policies with Royal London come with fracture cover and hospitalisation cover at no extra cost. And Gregor will tell us a bit more about this in a few minutes. So moving on now, how about self-employed? Remember, these clients have no employee benefits as far as sick pay is concerned. So a conversation about what happens if they can't work should be an essential part of their protection planning. In fact, we have a really clever tool on the advisor website, which I'll briefly show you in a moment. But just getting back to our list of potential clients, let's look at families now. So for any of us on the call this morning who are parents, the last thing you want when dealing with sickness or indeed loss of a loved one is extra financial stress. And I think that's why it's so important to talk to families about not only protecting their mortgage, but also having sufficient protection to ensure that they can cover their household bills and maintain their lifestyle, and generally keep everything as stable and normal as possible for their children and dependents. And how about those clients with high intensity occupations? We've mentioned here surgeons and teachers, but possibly any NHS medical professions. Might these professions result in some severe stress and anxiety with their job, which may in turn result in needing to take time off work? And again, in a few minutes, I'll quickly run you through a bespoke income protection product Royal London have to offer to NHS professionals. It's a tailored plan to help complement their, let's face it, what can often be quite a complex sick pay scheme. And the final two sections, those clients are single or divorced. These client segments find themselves with just their income, no second source of income to fall back on. So these clients would definitely benefit from probably a risk report and definitely a conversation about income protection. So I mentioned just a minute or two ago opportunities to talk IP to NHS professionals. So our NHS medical professional income protection covers any NHS professionals who work in the UK with a sick pay entitlement that matches the NHS sick pay structure. It covers doctors, surgeons, it also covers nurses and midwives, and also unusually dentists too. If it's a doctor or surgeon, they have to have a current license to practice in the UK. But the great thing is that when you set up IP on this product, you will always select a 52-week deferred period. But we will make sure that once your client, their income reduces due to them being off work sick, our income protection will kick in and match up to the amount that they've set. So 52-week deferred period, but it could actually start kicking in as early as 4 weeks. So I'd urge you, if you've got medics in your client bank, to have a look at this NHS income protection bespoke product. I just mentioned as well the self-employed. If you go to our Royal London Advisor website and look at tools, you'll see something called a national insurance calculator. It's very, very simple to use. You just need to put in the name of the client and their salary and then press calculate. The idea of this is it will show what on that income the client would have been paying as far as national insurance, and then what they pay as far as class 2 and possibly 4 national insurance as a self-employed person. And then at the bottom in the teal, it highlights that difference. The idea of this is to focus the self-employed client on the reduction that they're paying in national insurance, and maybe to give them the idea that that shortfall might be used to set up some private income protection provision. So you can find that on the Royal London website. The next thing that I wanted to talk to you is the menu calculator. Now, this is a new tool and it's only been live on the Royal London Advisor site for a short time. So let's just remind ourselves of Kate's situation and see how the menu tool could help you to speak to her. So the situation is exactly the same that we've talked about earlier in the presentation, but now she's told us that she's got a protection budget of about £30 per month. So as I said, this is a new tool. It's only been live on the Royal London Advisor site for a short time. So many of you may not have even noticed it, although those of you who dialed into part 1 of this webinar will already have seen it briefly. So the menu calculator is a really powerful way to talk about protection during those very early conversations. So if you remember the risk pyramid that Gregor showed us a little earlier today, and now how that introduced the client to risk, well, the menu calculator can help introduce the client to the concept of a menu plan early, and particularly our core subject today, adding some income protection. So let's just briefly look how it works. So I'm on the Royal London Advisor site, so advisor.royallondon.com/protection, and under tools, I'm looking for the value of menu tool. You simply need to answer some very few basic information questions, and then you'll be able to see a comparison of a traditional menu plan versus a more bespoke menu solution, and then further broken down into 3 options. And within these options, you can expand to get more details of what's included. Remember, these figures are just an estimate to help you have a conversation and help you maybe gauge a client's response to the different options. So in summary, this tool is a great way to get clients thinking about protecting all eventualities. But if we were to build our own menu plan to include income protection, what would that look like? So we're looking at Kate again, and we're looking at a Royal London menu plan. So a first point of call may be to deal with death or critical illness, and an ideal solution is to set up some family income benefit. Family income benefit, as you remember, is an income-based plan, and this time we've set it up to include critical illness. Incidentally, I think you'll find that family income benefit is probably the most cost-efficient way to set up a plan with critical illness. We set it up for £1,500 per month and over a 38-year term, maybe to look at Kate getting towards retirement. We've indexed it at RPI for all the reasons that Gregor ran us through earlier, and this time we've included TPD. And you'll see that that's a really affordable premium for Kate's budget at £12.11. So we've got some life cover, we've got some critical illness, both on an income-based plan. So how about income protection then? We'll add the £2.60 plan fee and the family income benefit, which, just to give us a check on our budget, we've still got over £15 a month to play with. So income protection then. This screen I'm going to show you is really the Rolls-Royce all singing, all dancing solution for Kate. We're going to set that up on a 38-year term, which is the maximum to take her up to retirement. We're going to set the maximum amount that Kate can have to, which in this example is £18,230, just over £1,500 a month. And if you're struggling with all the different providers offering different ways of calculating the maximum, again, I'd point you to the advisor site where there's a maximum income protection calculator. Again, very easy. You just need to simply put in the client's salary and it will tell you the maximum income protection with our calculation you can set up for the client. Again, for the reasons that Gregor mentioned, we're going to index this cover at RPI, and we're going to include the shortest deferred week at 4 weeks and the longest payment period. So if Kate makes a claim, this will pay for the full term of her plan. I'd ask you to have a consider what you think that premium might come out with for a second or two. Well, I can tell you that's going to equate to £67.70. And that sadly is way outside of Kate's budget. But let's have a look at making a few tweaks to this. So we'll bring the term back to 30 years instead of 38 years. We'll bring the amount that Kate needs per month back down to 1,200, and it could be in conversation that you find out that that's actually sufficient for what Kate needs. We're going to leave indexation for all the reasons we discussed earlier, but we'll push the deferred period back to 13 weeks. And again, in our conversation with Kate, we found out that she has employee benefits, so this would tie into kick in after those employee benefits come to an end. And the payment period, instead of full term, we're going to choose 5 years. So this means that if Kate makes a claim, that will pay for 5 years in one run. But remember, what Gregor explained to us, that it doesn't necessarily mean just a 5-year payment period. And again, can I ask you to have a think what that might make difference to the premium? Remember, we were at £67.70 before, and that brings that down significantly to £14.20. So let's add that back into our menu plan. And we can see now that we've got a total premium of £28.91. So just inside Kate's budget, and I think you'll agree, a really peace of mind solution to Kate's situation as a tenant. So we've provided some family income benefit and some income protection. So that brings us almost to the end of our webinar, but I'm going to hand over to Gregor in a moment when we've just revisited our, do you remember we called it a vicious circle? It's now a virtuous circle. So let's see the difference that we would make if Kate had got some income protection in place. So Kate goes off work. She now has a replacement income. She can pay those bills, which will give her time to fully recover. Those financial stresses that we saw earlier in the presentation are certainly eased, and she can return to work when she's ready, which means she has fully time to recover, so no recurrence of her incapacity. She's recovered in full and can return to work. So you can see the difference that this will make to our client Kate. So I'm going to ask you to listen to a not so dreaded call and the difference that our earlier scenario makes if Kate has some income protection in place.
Hello, ABC Financial Services.
Oh, hi. Can I speak to Simon, please?
Okay, I'll just pop you through.
Hi, Simon speaking.
Oh, hi, Simon. Kate Smith here. I don't know if you remember me. You arranged some insurance about a year ago when I first rented my flat from Edinburgh Lettings.
Hi, Kate. Yes, I do remember speaking with you last year. How are you?
Well, I'm not very good, Simon. I've really injured my back and it looks like I'm going to need some spinal surgery. So I'm in such a lot of pain and I think I'm going to be off work for at least 6 months. But I remember you set some insurance up for me. So could you help me make a claim, please? I've been looking for the paperwork, but I just can't seem to find it. But the premiums have been taken every month by direct debit. And the thing is, I've just paid this month's rent, but the next one will be due in just over 3 weeks, and I'm really going to struggle to find it.
No, that's terrible. I'm just having a look through your file. Okay, here we go. So I can see that we did set up a critical illness policy for you. And yes, also an income protection policy, both to provide a monthly income. And you should be able to claim on the income protection policy. And it looks like we set it up to pay £1,500 a month, which I believe is the amount of your main outgoings. The only thing you need to be aware of, Kate, is that you actually have to be off for 4 weeks before you can make a claim.
Oh, that's okay. I've paid this month's rent and I've already been off work for 2 weeks, so I can just about manage until next month.
Oh, that's good news, Kate. And actually, also your policies with Royal London. So they include an excellent service called Helping Hand, which can give you access to a team of expert nurses who'll be able to provide you with a whole range of support free of charge. They may even be able to help you with physio and rehabilitation after your surgery to help get you back to work as soon as possible. But Kate, let me get in touch with Royal London to see what we need to do to make the claim, and I'll get a call back to you and tell you a bit more about that Helping Hand service, which I think will be of real benefit to you.
That's great, Simon. Thanks so much for your help with all this.
No problem, Kate. I'll be in touch over the next few days.
So I think you'll all agree a much better outcome for both advisor and particularly the client. And we hope over the last screens we've given you some hints, tips and tools to have those compelling income protection conversations and really to ensure that clients get the protection solution that they really need. So that brings us almost to the end of our income protection webinar today. But before we go, I'm going to hand back to Gregor to outline some of the reasons we think Royal London is a great choice to build your client's income protection solution.
Yeah, thanks, Shelley. So as we wrap up the session today, I just wanted to end with really some further reasons why Royal London can make your income protection advice stand out. So I've got a little list on screen, just I'm going to run through a few of them. So we'll start off with free cover. So I guess on the occasion where your client's cover maybe doesn't start right away, you can provide them with the peace of mind in knowing that because their policies with Royal London, as long as we've received a completed paper or electronic application form, the person covered is under the age of 60, and you've included a completed direct debit instruction, then they'll be protected in the meantime with free cover. If you've got clients who maybe enjoy the more adventurous side of life, or maybe they've just encountered an everyday accident resulting in them suffering a fracture, we'll pay up to £4,000 per claim under our fracture cover to help with their recovery. Now, the payout received does ultimately depend on where the fracture is, and we can cover multiple fractures within the same claim, and you can actually make up to 2 fracture claims in a 12-month period. With hospitalisation cover, if your clients are hospitalised for more than 6 consecutive nights during their deferred period, we'll pay £100 for each night after that for up to 90 nights during the term of your cover. We've got terminal illness acceleration. So if a client's diagnosed with a terminal illness and they've got less than 12 months to live, then they won't need to wait for their deferred period to end before their payment starts. And of course, you wouldn't be at a Royal London presentation without even a small reference to Helping Hand. And again, a quick plug here. So mentioning that the service gives your clients, their partner and children access to practical and emotional support while they're recovering. And that dedicated nurse will be on hand for whenever and whatever they need, and ultimately is there to help develop a personal support plan tailored to their circumstances. So free cover, fracture cover, hospitalisation cover, terminal illness, acceleration and Helping Hand are all included within our personal menu plan income protection policies at no additional cost. And at the very bottom there, just finally, for advisors listening today who are active in the corporate protection space, we do offer an income protection product for key people within a business through our business menu plan. And actually, unlike income protection within a personal menu plan, with key person income protection, we'll cover up to 75% of the gross profit attributable to that key person, up to a maximum of £250,000 a year. The term of cover is slightly shorter on key person income protection, ranging from 5 years to 20 years. And importantly, we offer cover increase options upon the increase in value of the key person if the plan is accepted on standard terms. So this means that the person covered can actually increase their cover without any medical evidence if any of the following events occur. So that could be an increase in the business mortgage or loan, an increase in the value of a partner or shareholder's director's interest within the business. So we've got our learning outcomes back up on screen. I'm not going to go through them verbatim, but I do think we've managed to tick off all of them throughout today's session. And just before I hand back to Natalie to look through any of the final remarks that we've looked at today, just wanted to once again mention the advisor.royallondon.com/protection websites, which is on your website just now. And on behalf of Shelley and myself, we both wanted to just wish you a fantastic rest of the day and a massive thank you for joining us for the session. Natalie, back over to you.
Thanks, Gregor, and thank you, Shelley, for everything that you've set out today. Well, we've laid everything out on the table, and we hope that it's given you lots of ideas and tips for making income protection an essential part of your client's menu plan. Before we go, just a reminder that we'll send you an email with a link to some questions. Just answer these questions to receive your CPD certificate. And if any of your colleagues couldn't make it to today's session, or you'd like to re-watch this webinar, it will be available shortly on our CPD Hub. If you've missed our first webinar in our menu series, you can view it on the CPD Hub also. And I think that's actually it from us today. So many thanks for your time. We hope you've enjoyed this menu session, and have a good day.